Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, April 19th, 2011. This morning I'm talking about S&P warns U.S. and we're going to backtrack a little bit and we're going to talk about yesterday's action because yesterday's blog I talked about how, we had this familiar theme going on, how oil prices would go up on Fridays, then they'd sell off on Mondays and nothing happened over the weekend, sort of take all the markets down. Normally this was good for stocks, but stocks didn't react as well yesterday as people may have seen. It was down quite a bit, and it actually came back a little bit yesterday in the afternoon, but here in the U.S. session, but stocks were down quite significantly. Some of the other things that we noticed was that oil continued to slide lower, but gold actually pushed up higher, coming within, I think, $1 of 1,500 even, which would be an all-time nominal high there as well. So there was definitely some risk in the market. So the question is, well, what happened? Well, basically, we had risk going into the morning. Okay, we had the correlations with oil taking down the euro, taking down the Canadian dollar, as well as some of the other commodity currencies based on China saying that they were going to increase reserves for the banks. Okay, so we had some risk aversion happening already. We had stories being floated now about, possible Greek debt restructuring, problems with Portugal's bailout request. So there's a lot of different things going on there. There's also there was an election in Norway, which could potentially throw a fly in the ointment. So there was definitely risk aversion going on in the eurozone ahead of time. Okay, and then what we saw after that was that, well, I'm just going to look at the euro chart here as I'm speaking. I'll just show this to you. Okay, what we saw afterwards is that there was a, I'm going to go to 5-minute here so I can expand this to show you. We had Standard & Poor's come out, okay, and then they issued a debt warning, an outlook warning to the United States saying, hey, listen, if you can't get your debt problems under control, all right, you guys are facing a potential downgrade of your sovereign debt. Well, that's never happened, and if that happens, that's going to throw a whole fly. That's going to lead to huge problems. So there was definitely a lot of market volatility yesterday as a result of that warning. Now, people were saying all kinds of things. Oh, this S&P downgraded the U.S. Well, it wasn't an official downgrade. All right, it was a warning on the outlook of a downgrade, which means that there's a potential. I think it's a 1 in 3 chance that they could potentially lower rates or lower the credit rating of the U.S. within the next 2 years. Well, considering that the U.S. has the highest credit rating out there, AAA, there's only one place they can go, down. So, listen, this is more of a, it seemed like a lack of confidence in the current government that we have. It didn't really change anything material, but it said, just really said, hey, get your act together. You've been put on notice. Let's get something done here. And if that's not a wake-up call to politicians in Washington, I don't know what is. If the sovereign debt in the U.S. gets downgraded, well, guess what? They can raise the debt ceiling all they want. No one's going to want to touch the paper. It's going to set off a chain reaction. It's going to have catastrophic results. We might as well just say that the whole thing's over. So these guys better get it figured out. So we're just looking here at the euro. You can see yesterday, so euro was on a pretty gradual decline, and then right here at 9 a.m., that was when this S&P warning came out, and you can see, boom, right out of the gate, all right, the euro strengthened versus the dollar, all right, and then the market said, wait a second, we need to go back into risk aversion mode because this is a big problem, so we want to own dollars again, and then boom, you can see the second leg of the sell-off where euro continued to sell off before it bounced back a little bit. So it's interesting that, the initial market reaction was to buy euro and pound. I'll show you just here on the pound, see if this comes up as well. Okay, same deal for the pound, 9 o'clock, and then the sell-off, okay, because people were saying, whoa, this is going to be bad for the dollar, let's get out of dollars. But you have to realize that when something's bad for the dollar that bad, then that's going to lead to the flight to safety trade, which of course is going to mean dollar strength. So that's what we saw there yesterday. So the markets rebounded a little bit, came back, but it was definitely a down day. This morning we got Asian markets, which have sold off overnight. I'm just going to show you that there's some yen strength here versus dollar. All right, not a ton, but you can see that we've seen it yesterday. Now, Japan came out and they reiterated their support for U.S. Treasury market, which they should do because basically they're starting to see some very unwelcome yen strength here, thanks to the volatility with the dollar. So we've got money going all these other safe haven assets. You've got we can look at the U.S. Swiss franc from yesterday. Okay, you can see dollar falling versus the Swiss franc. So there was, definitely a lot of risk aversion in the market. Okay, and we're getting money's flowing to these different safe havens. So a new safe haven is gold. It's not really new, but it's acting as a safe haven currency. The Swiss franc, and of course money going back to the Japanese yen. Well, in Japan, they don't want money coming back to the yen. They want a weak yen to try and export their way to helping them with the recovery from their earthquake. So that's what they're looking at there. Just want to show you the Aussie. The Aussie's down a little bit today. Okay, just from the close. The RBA rate policy meeting minutes came out last night, and they essentially said that they're going to look through any high inflation because they're concerned about slower growth. So they're basically telegraphing, saying, listen, you're going to see higher inflation numbers here from us, but we're not doing anything about rates. Our rate policy is good. So you can see that the Aussie's a little bit lower. We've got dollar CAD. Dollar's just a little bit weaker. The CAD, it's pretty flat. We're coming out with CPI data this morning in about... in about 45, or no, excuse me, about an hour, I'm sorry, it's a half an hour. I better get my act together this morning. They're coming out in about a half an hour with those figures. So they're expecting to, see a little bit of a gain there. And the rates in Canada have been on hold for some time. Okay, so they're expecting a yearly, year-over-year figure of 2.8% inflation to grow. Okay, meanwhile, we've got the euro back higher, and we also have the pound. You can see, I'll just show you for today. Okay, Euro's trading higher. Let me get rid of this. Yeah, there we go. Euro's trading higher. Pound's trading higher. Okay, they had PMI figures in the Eurozone came in just a little bit better than expected. All right, and they're back to the old rate expectations game in the UK. So for the US, we've got building permits and housing starts due out a little bit later. And don't forget, this is a shortened week here. So, we're going to have to see what happens there. But, this S&P downgrade just brings the whole debate back into focus. And it's like, these guys going to get serious about debt or not? I mean, they want to increase the debt ceiling, but no one's willing to cut anything. And if they can't cut spending today, you'll hear the speeches, we need to cut $4 trillion, but let's do it in 10 years. No, 12 years. How about 9.5 years? And nobody can kind of figure it out. And the problem is that we need some real structural reform. And I think the problem with coming up with we need to cut X amount of dollars, now find ways to do it rather than let's just fix these programs. All right, it's going to be a downfall, and I don't know that these guys, in today's Twitter age and Facebook revolution days, have the political will to get up and say, hey, I'm going to do might be unpopular, and that means taking away a free lunch for somebody. It's bound to be on Twitter. Someone's bound to say something negative against them. So if that happens, oh no. But, until these guys can start providing a little bit of leadership, I tend to agree with the S&P that there should be a lack of confidence. So, anyway, that's what I'm looking at today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.